Hello guys, welcome back. It's Wednesday after a beautiful Tuesday and after a beautiful webinar we had yesterday, well last night. I'm here again to talk about the economic calendar because this week has been very important for US, for Europe, UK, Australia. Now this morning we had the CPI, so lots and lots of things to talk about today. Before we start, please subscribe to the channel, give us a thumbs up on this video. I guarantee you won't regret to give us a thumbs up already. All right, so I'm gonna wait for you until you give the thumbs up. I have my little blue tag here. I'm gonna play around, wait for you. We have time, I guess, you know. Oh yeah, I've heard it something, so you gave it, right? Okay, that's good, nice. Okay, done. All right guys, just joke around, but thank you so much for all the support everyone is giving to us. I want to see more people in the Telegram. All right, so if you're not there yet, then go to it. All right, the link to register, the link to join the Telegram is just at the description of this video. And as you're there, we have another webinar running tomorrow night, 7 to 8 p.m. In Sydney time. So be sure to be ready and be there. Okay. Now, let's just do a recap here on what we saw yesterday for US dollar. We've seen euro dollar going above the 107 mark. I've mentioned that the range between 106.9 and 106, that 900 points, 90 pips was the range. Now we've broke above the 106,900, so we may be looking to go to higher levels now. Why we broke up on that resistance area, right? Because we were on a consolidation. If you guys can see the chart right there. Now on 11:45 p.m. last night, on Tuesday, we had the manufacturing and services PMI for USA, and both of them came very bad. Okay, they came very bad. What I mean by very bad is lower than the consensus and lower than the previous. This is not good at all. All right, not good at all. All right, let's have a look at the numbers then. For the manufacturing PMI on April, we had the consensus at 52 and the previous was 51.9. So they were already expecting an up move, right? Bear in mind, they were already expecting an up move from the previous to the consensus. Then it turns out to be 49.9. So that is much worse than the consensus and much worse than the previous. Okay, then moving on for the services, services PMI, we had 52 as the consensus and 51.7 as the previous. Again, they were expecting better than the previous already, and the actual came in at 50.9. So worse than the previous and worse than the consensus. Unfortunately, these dragged the US dollar index down to the levels of 105,670 trading at this moment. All right, so we were all the way to 106,500, now to 105,670. So pretty much a thousand points, right? From one price to another, it's pretty much a big drop. All right, it is a very big drop. I'm looking at it right now, and if we get the measure to from the top of the 106,500 all the way down now to where the price is, this is a negative 0.79% drop. All right, on US dollar index. As do now we have euro dollar that is trading at 107.05, sorry, just broke the 107 resistance I've mentioned for you guys. And look guys, we may have a possibility, I've talked about that on the webinar yesterday. So if you haven't watched the webinar on live, if you were on live at the webinar, then you can simply go to the YouTube channel, subscribe. I'm gonna wait for you again to subscribe to the channel. Yeah, okay, good. The last video we posted is the replay of the webinar. You can see it's very big on the thumbnail, replay. That's the video you want to watch from you know, if you want to watch the replay from yesterday webinar, this is the one you're going to be looking for. All right. So I've mentioned that we may be looking at an intermediate trend up into the euro dollar, but later we most probably will continue to go to the levels of 105. Unfortunately, we didn't have a break below the 106 line. I'm just looking at it now. We touched that twice, but we didn't have a break of the 106. Otherwise we would be going to the 105. So if it breaks below the 106, I'm looking at the 105 target. All right, so enough for the euro, enough for the US dollar. Let's switch some gears here and come to Australia. Yeah, that's correct. We did had a CPI coming in this morning, 11:30 a.m. for us. The CPI year over year, the CPI quarter over quarter, and the trimmed mean CPI quarter over quarter, quarter one. All right. Sorry, I forgot to mention that year over year and quarter over quarter are the quarter one, both of them. All right, so all the news are. All the data coming from quarter one. Now let's see what is actually happening here. So the previous was 4.1% on the year over year. The consensus was at 3.4%, and the actual came in at 3.6%. Okay, so much higher than the previous. Much higher than the consensus. 0.2% higher than the consensus. Quarter over quarter, previous was 0.6%, consensus 0.8%, and the actual 1%. Okay. Now the trimmed mean CPI quarter over quarter, the previous was 0.8%. The consensus was no changes, but it came in at 1%. These, as we can see on the chart, made the Aussie dollar against the US dollar go to 0.65 200, even 300. So right at the news when the data came out, it made a very strong Aussie dollar. Why is that? Well, investors were expecting lower inflation, but remember what I've mentioned this multiple hundreds, thousands of times. If people continue to spend, then the inflation will continue to go up. And this is exactly what is happening in Australia. Why? Take it like this. If you live in Australia, if you live in Sydney, most specific, you will know what I'm talking about. Rental prices. Rental prices are driving crazy at this moment. All right. One of my mates here at the trading floor, he was talking about 70% increase on his rent prices since 2022. So that's a 2-year, right? Span of time of 2 years, let's say, on a 70% increase on the rental price. People have to spend. Right? Property prices will go up slowly, but it will. All right. Luckily, me and my family, we got one already. So, I would say luckily, because it's very hard for you as a normal person come and buy a property at Sydney market because prices are crazy. Okay. I've worked already on real estate, and it was a 2018-19. And the prices there was like a 5-bedroom home, beautiful home, 700,000. Now it's close to 2 million. So it just in like 6-7 years, the property price have go to the roof. And the rental prices have to follow this as well, because the property is more valuable, then the rental will be more valuable. So there's always those adjustments that they do yearly or quarterly or whatever the market is looking to. So most probably this inflation is propounded by the real estate market in Australia as well. Okay. My view is I'm out of Aussie dollar at this moment, or I'm not looking to trade Aussie dollar just because of this discrepancy. I don't know what's actually going to happen. The investors are what are the central bank doing? They don't even know what are they doing. Inflation is coming high. What are they going to do? They don't know what are they doing because inflation. So it's like it's a loop. All right, and it's a very dangerous loop. So hopefully Australia can get off from this one. So this is all from me today. Just making sure you guys know that tomorrow we will be having the Anzac Day. all right, in Australia. So this will be public holiday. We won't have any video, all right, but we will have the webinar. All right, so make sure to register for the webinar. We'll do the webinar 7 to 8 p.m. And then on the webinar, we will discuss what I think about the GDP for tomorrow from US, quarter over quarter, and then the GDP price index and some initial jobless claims as well. All right, so stay tuned. Subscribe to the channel, give us a thumbs up on this video, share this video with your friends. Maybe they like to trade, they like to be informed, well informed. This is where they should be looking to look no further than ACY YouTube channel. All right, guys, thank you so much, and I'll see you in the next one.